You give us some good reasons why January was pretty good. The idea that maybe the economy would slow and the Fed would be close to an end point. And then, as you say, everything flipped in February. Do you think, which was more accurate to the true state of affairs, or is it somewhere in between for where we are now in March?
Yeah, I think as we head into the last month of the first quarter, Joe, it's still the Fed on trade. I think January we were wrong. We were assuming the Fed was off. They were close to their completion of rate hikes, which would put us closer to a rate cut. And when we got that jobs report on February 3rd, I mean, it was the Fed on all over again. And the growth trade that worked in January kind of reversed. It became a value trade in February. And I think that trend's going to have to continue here in March. Even the weekly jobless claims we got this morning, sub 200,000 is not what the Fed wants to see. I mean, quite frankly, they probably would like to see 300,000 plus, which makes next week's job number so important for us. But it's data dependent for March, and I think that the Fed on trade needs to continue to be the defensive posture that investors take.
It's a combination of the jobs report and then the PPI and CPI and PCE, and they're all equally important, do you think? I guess you could, I mean, a perfect world would be, a modest wage growth with good jobs numbers, but then cooler inflation numbers, and that'd be the best of both worlds. But you think the Fed would still feel like it had to go higher and stay longer if jobs hold up?
Yeah, I don't think 1 month's going to make a trend. We definitely need to see a number next week that's completely unlike what we saw last month. The CPI is going to be just as important as the jobs number, to your point, Joe. And I think that the Fed is looking at this and saying, we're probably not going to see disinflation come down in a linear manner. There's going to be a stair step. What we saw last month and possibly a little bit of a bump here and there along the way is to be expected, because a lot of their work takes time for it to kind of permeate through the system. And none of us like to wait. But I think that the Fed higher for longer narrative is the base camp that we're in. June is a pivotal number, a pivotal month in terms of what they're going to do in terms of number of rate hikes. So if we get 2 more 25 basis point rate hikes, the June meeting becomes really, really important. Where do they go from there? And between now and then, I think range-bound trading is what we should be expecting.
So range-bound, okay, because what you're describing, everybody's basically in this camp now that we talked to, and so it's front and center for the market, and we know where the stock market, we know where the stock market is. Would things have to be even more surprising for the market to go much lower, or could it go lower just based on what you described here? I mean, do you expect a retest of the lows at 3,600 based on what you just described?
No, based on what I've described, I don't think we have to go back to the lows. I do expect the market to go lower. I think it's a little higher. I think it's a little stretched here than where we should be trading. But your comment that everybody's kind of back onto this camp is maybe a good thing for the positive bullish narrative, because it never hurts to have a little bit of a contrarian approach to things. But for us, the fact of the matter is we think that these markets are a little overvalued here. We think you need to wait and see to kind of get a sense of what the Fed really wants to do. Where do they want to take that terminal rate? Is it 5.25? Is it 5.5? You're starting to hear people talk about 6%, which was a very big number in November and December. Not a lot of people were saying that. So it really comes down to how high do they go? How long do they keep it there? And ad nauseum, we're talking about this inversion in the yield curve, and it's embarrassing that we keep ignoring it. But the bond market is clearly telling us that a soft landing, for this thing to work out perfectly, is probably an unlikely event. So I think you want to look at the entire landscape, remain defensive, keep a little dry powder. But I'm not a bear. I'm still looking at this very positively over the longer term. But like I said earlier, none of us like to wait.
Right. Well, that's the question, and it depends on your time frame, whether do you wait for a 5% move down before you buy, or if you're long term, do you just say, I see some things I like now? So everybody's got to just look at their own situation, I guess, Kevin. But it doesn't sound like you said, you don't sound overly bearish. But we appreciate it. We'll check back with you after next Friday, and then I think the week after that we get all the PPI, CPI, PCE, alphabet soup. But good to have you on. Thanks.